Welcome back to the channel. So this is part two of a deep dive of the trading DOM and reading the trading DOM and how to utilize it into your trading system. Everyone has its own trading system, of course. And again, what I found out is that I was looking more at the trading DOM more and more than to the candlestick charts. I still have a TPO chart open on my screen and some other charts. Like over here, I still have my GEX levels that I like to watch, but my main focus is still going to be the trading DOM. And every trading DOM looks different. Mine looks like this, and it can be quite overwhelming for a lot of people. They see a trading DOM with a lot of numbers. But today I want to explain what to look for, how to spot the support and resistance on the trading DOM, and also talk about what the difference is between the support and resistance from a candlestick chart and a support and resistance on live market data that changes on the nanosecond, or the millisecond, I should say. Well, yeah, nanosecond as well. But yeah, let's get into it. I made a little presentation yeah, to make it a bit simpler and yeah, I think it's handy. But today our foundation is understanding the DOM versus the traditional support and resistance. We are going to talk about volume profile integration and reading level 2 data accurately. And that's what I was talking about. All these numbers, and you have no idea what it is. I'll explain what it is. The psychology, the market maker behavior. And by this, I mean the patterns that we can spot. And in the last video, I already talked about it and gave a little bit of homework that you look at the 30 minutes of the open of the London Open, the New York Open, or any close for that matter, and see how the market reacts. Those are basically algorithms fighting each other and they can give a reaction. But those algorithms, they leave a pattern and you can trade off those patterns, and that can be very handy. I'm also gonna talk about entry and exit strategies, and the most important one I think is risk management, so position sizing with the DOM. And if you see a very good setup, and that is with Confluence on other DOM charts as well, then you can size up. And I will also give some case studies and some live market examples. I have some basic screenshots, not with my colors, and this I've kept it very basic so that everyone can follow along. So yeah, here I was already talking about it, but what we'll learn today. But for here, let's start with the DOM and the traditional support and resistance. So looking at the traditional support and resistance, you normally would take out a 4-hour chart or a daily chart, weekly chart, and you would mark down the high and the low. And they work. I also done it in the past as well, and I sometimes still do it for certain symbols that aren't moving that fast. But the difference between doing that is basically you're setting a support and resistance from previous data, historical data, while the DOM, you are looking at the order flow data in real time. Meaning you actually see a huge wall down here and a huge wall up here, meaning that is your current support and resistance. And the market is a live thing, so the support and resistance, they move during the day. So it could be that a support or a resistance moves up or down. That happens, and that is normal. So you have dynamic levels that change instantly, forward-looking market structure. So instead of looking backwards, you're looking forward. And that is the big difference. All right, then we are going to talk about the depth of market. What is the depth of market? It's a real-time display of the buy and sell orders, and it shows the bid and ask prices and quantities at all levels. It reveals market liquidity at all levels, and it updates in milliseconds. So that is it in a nutshell. But how I look at it is basically looking at a live auction. So we are think that you're on the at Wall Street at the stock exchange, and everybody is shouting, "Hey, I want to buy," and "Hey, I want to sell." That's what you see over here, and there are people that want to buy at this level, and some people want to sell on this level over here. And yeah, if you look at a candlestick chart, and for instance, you have a 5 minute candlestick chart, you can see some updates, but meanwhile, I can see that a lot of sell pressure is going to stack up over here. And there are a lot of people, once the price goes up, we are going to probably sell off. And that is the advantage you have when looking at a trading DOM. And let me just grab back my PowerPoint over here. I also have an example of how to spot support. So for instance, you're trading over here at the 18 level, and you see down here a huge bid order from 1000 plus. You can see that it's support, because everything else is small, weak, and this is just going to range, and then it's going to fill this, and then it's going to bounce down, and it's going to bounce down. And eventually this will hold a support, probably, depending on, of course, going back to the training DOM. Let's see if we have a good example over here. Not really. So currently we are in the London session, and it's a bit thin for the NQ, and for the ES it's thicker, but also not great. I do have an example the other way around for resistance. So currently at the 24 level over here, I would call this resistance. So meaning the price will go up here, and eventually this will block it. But what I do notice as well is that we don't have a lot of big orders behind it at the moment. This can still change, of course, because it's live market data. And if I look over here, this is the micros and this is the minis. And on the minis, let's see. No, this is still looking thin. And then all the way up here at almost at 30, we have another wall. What I would call support and resistance, or this as true resistance, is if we see more walls, like 3 of them stacked behind each other, then yeah, you have a certainty that this is gonna fail and bounce back. And vice versa, of course, then also for the support. All right. And I still use my own trading DOM. I said I was going to use my basic examples over here, but I thought, hey, maybe I can spot one on the live markets right now, and almost. All right, next slide. Identifying the DOM support levels. So what I said before with the candlestick charts with the support and resistance, that you're looking back in time, it's still somewhat important to have multiple time frame confirmations. And I also use them still. I use the 1 minute, 5 minute, 15 minutes, and 30 minutes. So not the 4 hour or the weekly or the daily or the real high time frames, though they can still also be useful, don't get me wrong. But for me, it's important if we want to spot good support. First off, we would see something like this. So we would see stacking. So 400, 600, 900, and then continuing on, then you know, okay, this is going to be good solid support. And yeah, the first levels will probably get filled and they go down and they break and they break and they break. But eventually, especially when you see the sellers with a thin line like this, meaning it's not gonna be strong. If this were the other way around, then you would see it as resistance and then we would slide down, but that makes sense. Again, on a busy trading DOM, that can be very overwhelming and you don't know where to look. And that's why I think having an image like this is also handy. And now coming back to my trading DOM, so I zoomed in a little bit on my trading DOM, and as you can see over here, these are the 1 minute, 5 minute, 50 minute, and 30 minute VBPRs. And so the volume profile time frames, and you can clearly see they are kind of aligning over here. So over here and here. I think I can do this. Nope, I cannot. I can only do it on a chart and then I can mark down things, but this is really only the trading DOM. But you still get the idea. And let's continue. That's also something I wanted to talk about, and that is also important. If you only see one bar, like let me just grab my fallback over here. So for instance, you see just one big support line over here, and it's not a guarantee. It can break and we can just continue lower. If the sellers are more in control during that time and we are trading over here, we can still drop down, and you don't want that. So what I look for on the trading DOM is, first of all, if I see this, then it's very clear for me. But if I don't see that and I just see something like this and I'm not so sure, first of all, I would size down. I would have a tight stop down below here for if it fails. And once it goes down and I see orders spoofing, meaning the market makers are removing their orders and they're setting it lower. That's also basically you're looking at algorithms playing with the market. So they use this as a big magnet so that the price goes down. Once it almost hits the target, they remove the wall and they let it slide down even more, and then they can catch the price for a cheaper price, basically. And this happens very often. So if I see this as a support, I would hold off or maybe just do one contract and just for as a feeler trade, basically. Only if I see this, yeah, then I think I will go in with a bigger size, still with a tight stop down below. So if it gets invalidated, so be it. And if I trade the NQ, for instance, I would have a bit more wider stops than on ES. For NQ, I would have a 12 tick stop, and that is very wide. But on the ES, I would have a 6 to 8 tick stop. And over here we can see a support building in real time. So you have small orders over here, but then these can grow during the market. And if you're trading over here and you're going up a bit, but you see this growing, then you know, okay, the support is building and the algorithms are placing their orders over here. And keep in mind, this is still going in microseconds, so it's going very fast. And you also have to take into account, are they gonna keep their orders over there, or are they gonna remove the orders over there? And if the price is very low and over here, and they are buying over here, then you have a certainty that it will stay over here and that this is gonna be a new support, and that this over here might not even get filled. I also have seen that happen many times before, that I place a limit order over here thinking, oh, I'm gonna join them in the queue, but you have to keep in mind the algorithms are mostly high time frame algorithms that are first in queue, and you are yeah, million steps behind, slow, and you're waiting to get your limit order filled, and meanwhile the price does this and say haha goodbye, and you missed a great setup. So what I would do over here is, if I see it uh, growing over here from 285 to 400, I quickly decide, okay, I'm going to execute a long order over here, maybe a market order even, and with a stop still down here, and with the risk that I'm willing to take during the trades. And yeah, again, if it fails, it fails. But if I see this growing fast and I see support over here, I want to front run it a little bit and have a little bit of drawdown and just have a successful trade afterwards. And most of the times, this is a great setup if you see something like this in the order books. And so here you have multiple support levels stacked. Still, this looks better than what we had over here. So this was already trading over here, and you had only 1, 2, 3 over here, and was kind of scattered, I would say. But if we look over here, we're trading over here, and we have small gaps down here. I would still take this, but with reduced size still. I would rather see something like this. This is the A plus setup for me, and that will be a B setup, and that would be a C to D setup. So 1 contract. And yeah, basically the same goes for the resistance. I have some examples here as well. It's basically the same, but the other way around, let's be honest. And I think that would be it for today, because I think we are already going on for almost 20 minutes now, and it was a bit longer than I expected. I want to keep those videos that I'm making a bit short, like 10-15 minutes, and then create another video. So for now, I would say thank you for watching. I hope this was a bit informative and that you learned something from it. For now, I would, if you've done the homework that I asked from the last video, and again, it's up to you if you want to do this and if you want to learn this. But if you're serious with trading and you want to be profitable with this, I would highly suggest looking at the trading DOM, journaling what you see, and try to spot these examples that I've shown over here. These examples, they happen every day. Every single day I see them, and I mark them down. In the beginning, I took screenshots and I placed them in my journal with notations, and there was a lot of work, and eventually I quit taking screenshots and I just note down what I see. But for the beginning, maybe it's good to take screenshots and to write down what you see. And then later on, you can look back at it. But again, for now, thank you for watching, and yeah, until the next video.